Have a good, wonderful day. And today we'll be learning the next important chapter, acquisition of business. So the acquisition of business is most important in company accounts. In corporate accounting, it plays an important role. And this also carries more important concepts of what we need to learn as we become students. So what is acquisition of business? Acquisition of business by a limited company. It refers to a purchase of a non-corporate business like sole proprietorship or partnership form of business by a company. So its acquisition of business is acquiring a non-corporate business as well as the corporate entity which is already existing in the field of business. This does not necessarily mean that a limited company cannot acquire the business of a corporate body, that is, another limited company. It is possible to acquire, but strictly speaking, the acquisition of business of a limited company by another limited company comes under the purview of either amalgamation, absorption, and reconstruction of companies. Such an acquisition of business by a limited company may take any of the two different forms. One is an existing company may purchase an existing business, or a new company may be formed to take over an existing business. That is, the existing business unit may be converted into a limited company. If the object is to retain the control of the particular business people in the company, then a private limited company may be formed. On the other hand, if the object of conversion is to supplement the resources for carrying out the various expansion programs, a public limited company may be formed for this purpose. So hence, a company, when they buy the other businesses, it comes under acquisition of business. When they buy the existing company, then it comes under acquisition of company. When you buy the limited company to another company, then it comes under acquisition of business in any one of forms like amalgamation, absorption, and reconstruction. So in corporate accounting we will be learning the amalgamation, absorption, and reconstruction from different perspectives. Where amalgamation means it is liquidating two or more companies and merging together. That is called amalgamation. Whereas absorption means acquiring a company by the another company, which means one company is liquidated and it is absorbed by the existing company. Whereas reconstruction means that there are two types of reconstruction we have. One is internal reconstruction, the other one is external reconstruction. Here, the internal reconstruction means where the company's balance will be altered with a special resolution from the shareholders and board members. Whereas the external reconstruction means the entire the business will be reconstructed and it becomes as a new company. So that's how the internal and external reconstruction happens. So the acquisition of business can be explored in these different pathways. So one is acquisition of business, the other one is acquisition of a limited company by the existing companies. So when the two registered companies and gets merged or occurred, then there is a great impact on the financial statement and as well as a great impact on the owners, borrowers, and all the stakeholders. That's why it gains much importance in the accounts chapter. Now let me take you towards the important points that need to be noted in connection with acquisition of a particular company or business. So we have few important points to be noted, which is expected to be in multiple choice questions also. So first point is the consideration. What is consideration? Consideration refers to the price payable by the company for the business acquired. So in short, we call this as purchase consideration. Generally, an agreement is made between the company and the vendor containing the terms and conditions of the acquisition of business, the basis for determining the consideration, and the mode for payment of the consideration. Consideration is usually determined by taking into the following facts. 1. The present value of net tangible assets acquired, that is, the present value of gross tangible assets acquired less liabilities, if any, acquired by the company. Second, the amount payable, if any, for goodwill of the business acquired. And the third, the liability to be taken over by the purchasing company. So, by doing this alteration, we will come to know the consideration amount, purchase consideration amount. In case, for determining the present value of the assets, the revaluation is made, and the revalued figures should be taken as the present values. Otherwise, book value should be taken. In case the business is purchased for a lump sum, the difference between the purchase consideration which to be paid and the value of net tangible assets will be the result of goodwill. It also comes over the profit created incorporation in the upcoming chapter. So when the purchase consideration is more than the net tangible assets whatever occur, then the result is called as goodwill. On the other hand, if the value of the net tangible assets exceeds the consideration, the difference will be treated as capital reserve. As the terms and conditions of acquisition of business may vary in different circumstances, the basis for determining the consideration also varies from case to case. For example, it may so happen that only the fixed assets of an existing business may be taken over by a company, or only the tangible assets may be taken over by the company, or both the assets and the liabilities may be taken over by the company. However, in most of the cases, the consideration is given in the problem itself. We have few methods to calculate the consideration also based on the conditions upon which the business has been acquired. So that's how we may move towards this. So purchase consideration is an important point which have to be noted for the calculation, as well as a conceptual point from the acquisition of company. The second note, the important note, is that mode of payment of the consideration by the company. So what is that mode of payment? After the consideration is determined, the next question that arises is how to satisfy the consideration. The purchase consideration may be satisfied by the company in any of the following ways. Point number 1, the entire consideration may be paid in cash. That is one option. Point number 2, The entire consideration may be paid by the issue of shares of the company. Point number 3. The entire consideration may be paid by the issue of debentures of the company, or the consideration may be paid partly in cash and partly by the issue of shares and or debentures of the company. So in simple way, it means the purchase consideration. For example, it comes around rupees 12 lakhs, say for an example. So the 12 lakhs can be paid in cash by the clearing company. But sometimes the company may not have such a sufficient amount in their rotation. So what they used to do, they will go for the other option, which means the entire consideration may be paid, which means the entire 12 lakhs may be paid by the issue of equity shares of the company, of the acquiring company. The acquiring company may be a well-versed company in the market, in the field of market. So the business which is lended over, they may go for choosing the issue of shares. So in that case, the company also, the acquiring company also need to pay money. At the same time, they can issue shares to the worth of that purchase consideration. And if we carry the same example, issue of shares is not possible for some time that the company might have reached the maximum limit for issue of shares. SEBI guidelines will stop you to further issue. So the entire consideration, that is rupees 12 lakhs, may be paid by the issue of debentures of the company by segregating different units of loans. So in this chapter we also learned what is the issue of debenture and redemption of debenture. So here the issue of debenture happens as part of the purchase consideration in different number of units. So by the way, the purchasing people, the selling people, who are also interested to gain from the regular interest from the same company. Whereas if they get if they get a different number of shares, equity shares, they may or may not get the dividend based on the profitability of the company, because the entire dividend is purely based on the profitability of the company. The consideration may be paid partly in cash and partly by the issue of shares and or debentures of the company. For example, whatever the example I said, you take the 12 lakhs, the same 12 lakhs. 6 lakhs is paid in cash since the company have some liquid fund, and remaining 6 lakhs may be paid by the issue of shares and or the issue of debentures. Say for example, 3 lakhs by equity shares and remaining 3 lakhs by debentures. So it is a combination. Generally, the last method is adopted by a company to satisfy the consideration, because it gives a greater leverage to the selling people, to the selling company, because they get purchase consideration, some liquid amount to settle their dues. At the same time, they get equity shares to expect the future returns on their investments as part of dividend. And also it ensures the fixed amount of return as interest in the future for their debentures whatever they hold. And also it ensures that the redemption of debenture will give you a good amount of return after some period which is specified in the debenture itself. Hence, the last method is adopted by a company to satisfy the consideration. And it is more important to note here that the shares or debentures may be issued to the vendors either at par or at premium or at a discount based on the reputation of the company or the reputation of the business. Hence, the purchase consideration is paid, which is more than the total cost of the tangible assets then the excess amount is called as goodwill. If it is paid less than the tangible assets whatever we acquire, then the deficit amount we can call that as capital reserve. So till now we have seen two important points. One is purchase consideration, and the other one is mode of payment of purchase consideration. Now, the third important point to be noted is that interest payable to vendors on the purchase consideration. So what happens if it's so? Interest to be paid on the purchase consideration. If the payment of consideration to the vendors is unnecessarily delayed, then the question of payment of interest to vendors for a period of the delay naturally arises. Then the vendors will fed up. They even withdraw their obligations to sell that particular business. So in such a case, the vendors are legitimately claiming interest on the amount due to them for the period of delay. And that is from the date of purchase till the date of payment. For example, I acquired an existing company for rupees 15 lakhs. But I thought I can pay the money in cash, but due to the fund locked in my business, it would not be paid. So what happens? I paid some amount as token. For example, I paid 3 lakhs, remaining 12 lakhs need to be paid. But it gets delayed. I acquired the company, but it gets delayed. I have to pay 12 lakhs. If it delayed for 3 months, like 6 months, it's a great loss for the vendor who sells their business. So the Company Act also advises that the unnecessarily delay, the question of payment of interest to the vendors for this period of delay naturally arises. In this case, the vendors can legitimately claim the interest on the amount due to them for the period of delay. So the period of delay in the sense from the date of purchase, from the date of acquisition of the business till the date of payment. Hence, the agreement must mention about the payment of interest to vendors, specifying their rate of interest, whether they pay on time or they will make delay. Irrespective of that, this rate of interest have to be mentioned in the agreement between the acquiring company and the vendor. The next important point to be noted is the realization expenses of the vendor to be borne by the purchasing company. Is that so? So what happens when the vendor is expected to sell their business? There used to be some realization expenses which are supposed to be paid by the purchasing company, acquiring company. Sometimes the purchasing company may agree to bear the cost of realization of the vendor. And the fact must be contained in the agreement. If it is not so, then the expenses have to be borne by the vendor himself or herself. Then, if the realization expenses have to be borne by the purchasing company, acquiring company, then it has to be specifically stated in the agreement itself. Such expenses are to be treated as capital expenditure of the company, and it should be debited to goodwill account. Please make a note, because this is the most important area where the multiple choice questions are expected. Such realization expenses are to be treated as a capital expenditure and should be debited to the goodwill account. The realization expenses of the vendor can be borne by the purchasing company only if the agreement states that and in most cases it used to be borne by the purchasing company, since it is in favor of the acquisition. Such expenses have to be treated as capital expenditure, because the realization expenses, even you come across during profit created incorporation chapter, when you come across in the future in the upcoming 2 weeks, you definitely will get to know. So how it is treated, but it used to be treated as capital expenditure of the company and should be debited to goodwill account, or should be adjusted with the goodwill account. The next important area what we are going to see is that whether to open a new set of books by the company on acquisition of business, or to continue the books of the vendor. So what would be the right option? Can they open a new set of books, or they have to continue the same books of the vendor or the selling company? So on acquisition of the company may either open a new set of books for recording its transactions, or continue the same set of books of the vendor. A decision has to be taken by the company in this respect. If they are about to open a new set of books, then they need to fix a particular date and time and start from their new venture with the support of the auditor, the financial auditor. Or if they would like to continue the books of the vendor as it is, then only the labels have to be changed and the acquiring company name and their registered office address. So whatever may be, a decision has to be taken by the acquiring company in this respect. So as of now, we have gone through a few important points that have to be noted in connection with acquisition of business. So one is consideration. The second one is mode of payment of that consideration by the company. Next, interest payable to vendors on the purchase consideration if it gets delayed. The fourth, the realization expenses, is that who has to bond the realization expenses at the time of acquisition of the business. The fifth one, what we have seen now, whether to open a new set of books by the company, or they need to continue the books of vendor. So whatever may be, a decision has to be taken by the company in this aspect. And next, the last but not least, the sixth one is collection of debtors and payment to creditors of the vendor on behalf of the vendor. Sometimes the debtors and the creditors of the vendor are not taken over by the acquiring company. In such cases, the purchasing company may agree to collect the debtors of the vendor and to pay the creditors of the vendor as the agent of the vendor. As the agent of the vendor, as a middleman. Instead of the vendor have to pay, let me take the responsibility to pay, and I am going to act as a middleman. So the vendor, in exchange of setting commission at fixed rate, the acquiring company may charge certain commission at fixed rate since to manage the receivable and payables. So we have a great chapter called receivable management in the other subjects in the upcoming semester. So there you will learn how the receivable management happens between the debtors and creditors. So on time we need to receive and on time we need to pay. Or even we can say we need to receive yearly as much as possible, and we need to pay a little late so that we can maintain the position of amount into our account. So All these 6 points have to be noted as an important point during the acquisition of business. Now, we'll be focusing on what are the accounting entries in the books of the purchasing company on acquisition need to be followed. When a new set of books are opened, that means when the business is acquired, when the assets and liabilities taken over by the company, and when the business is acquired, when the payment is made to vendors, and during the interest is payable to vendors, and realization expenses are to be borne by the company on behalf of the vendor, and the expenses are losses which have to be accounted by vendors, borne by the vendors if required. So these entries have to be entered when the new set of books are opened by the acquiring company. So accounting entries in the books of purchasing company on acquisition, it happens only when the new set of books are opened in the acquisition company. So this is highly strongly advisable by most of the auditors to open the new set of books when you acquire a new business in company. So first one, when the business is acquired, the first journal entry is, I request you all to write in your notebook one by one, because I will be explaining this with a special note. So when the business is acquired, you can pass to a journal entry called business purchase account debited to vendor's account. So here the vendor can be anyone, X and Co, Y and Co, some company name. So business purchase, that means purchase consideration account debited to vendor's account. So here the consideration amount can be written in the debit and credit column. So why it is debited, the business purchase? Because business purchase is in nominal account. So because you are acquiring some business, you are paying. So that for that payment you are making the name is called business purchase account or purchase consideration account. So you are naming that payment. So that is called as nominal account. So nominal account says all the expenses have to be debited. So here acquisition of business makes a great amount of expenses. It could be a capital expenditure, but it is an expenses. Since it is an expenses, you can debit the business purchase account debited to vendor's account or the selling company account. So what is that? The vendors or the personal account. Debit the giver, credit the receiver. So now we are paying the money and the receiver is the vendor. So credit the receiver, hence the vendor account is credited. So business purchase account debited to vendor's account, and we need to write the purchase consideration amount either decided or to be calculated. Based on that, we need to fill up the amount. Next, when the assets and liabilities taken over by the company, so during that time, what is the journal entry to be passed? The sundry assets account debited. Sundry assets, which means we need to bring out all the sundry assets whichever we take over from the vendor company. So it can be land, it can be building, it can be debtors, it can be bills receivable. So list out all these things individually. We need to list out. So here so simple is that sundry assets account debited to sundry liabilities account. This is also you need to write individually. Say for example, creditors account, bills payable account, provision for tax account, etc. etc. All sundry liabilities which are payable need to be credited, and then the difference between debit and credit we can call that as purchase consideration. So that purchase consideration have to be credited or either way based on the balance occurs in any one of this column, either debit or credit. So the journal entry, let me repeat again, sundry assets account debited. We need to list out all individually, and then 2 sundry liabilities account. So how do you remember this? So simple. All assets have debit balance. All liabilities have credit balance. So assets have to be debited, liabilities have to be credited. So with this logic, you can easily remember. And then the balance can be either debited or credited based on the balancing figure, and this can be called as purchase consideration account. Mostly, the purchase consideration account will have a credit balance because it is a payable. No one will sell their business at a loss, even if they sell at a loss, but it won't have a huge impact. So the business consideration, that means the purchase consideration, used to be credited, but it does not mean that it always will be credited. Sometimes it may be debited also. So this has to be done when the assets and liabilities are taken over by the company. This has to be done with the revalued figure only, or if this realization is not done, revaluation is not done, then this can be taken at book value with the values at which they are taken over with the consideration. Alternatively, instead of passing the above 2 entries, the following entry may also serve the purpose when the business is acquired. One is sundry assets debited to sundry liabilities account to vendors account. So when the purchase consideration is not decided, then we may follow this. Here also, we need to take only the revalued figures if we need. Otherwise, book figures with the values at which they are taken over with the consideration. If the credit total is greater than the debit total, the differences should be debited to goodwill account. If the debit total is greater than the credit total, then the differences is to be treated as capital gain, and as such, we may treat this as capital reserve account that should be credited, either goodwill or capital reserve. It should be ascertained only as indicated above. The amount appearing in the vendors, the balance sheet is not relevant. Hence, the goodwill or the capital reserve account need to be recorded in the acquiring company's name. So next important thing is that when the payment is made to vendors, when we make any payment to the vendors, so during the payment made to the vendors, we need to pass the following transaction journal. So vendors account debited to share capital account, to debentures account, to cash or bank account. Please make a note, it is assumed that the payment is made in 3 forms: cash payment, as well as issue of equity shares and issue of debentures. If you are making only one form, that is only by way of cash, or only by way of debentures, or only by way of shares, then you can make only one that particular account. For example, vendors account debited to only issue of shares, the entire purchase consideration is issue of shares, then the journal entry would be vendors account debited to share capital account. Or the other way, if the entire purchase consideration is paid through or by issue of debentures, then the journal entry would be vendors account debited to debentures account. Then when the entire payment is made by cash or check, then the journal entry would be vendor's account debited to cash or bank account. Because vendor is the personal account, debit the receiver is the rule, so they are the receiving amount. So that has to be debited. Whichever goes out from us, then it has to be credited. So if you make a combination of payment, the purchase consideration, during your payment, then accordingly the journal entry has to be made. So hence the compound entry would be vendor's account debited to share capital account, to debentures account, and to cash or bank account. So this also with the amount due with the value of shares allotted if any, with the value of debentures allotted if any, with the amount of cash allotted if any. And if it is only particular account or particular payment option, then only that account can be treated. So here when you issue the shares for the entire purchase consideration, or when you issue debentures for the entire purchase consideration, then it should be credited only with their nominal value, not at that market value. Only at the nominal value. Please make a note. This is an important area from which you can expect the multiple choice questions in the Smile platform. It is more possible. So the share capital or debentures or even both should be credited only with their nominal value. And the third important condition is that if the shares or debentures are issued at premium, the securities premium account should be credited with the amount of premium. Similarly, if the shares or debentures are issued at a discount, then discount on issue of shares account or discount on issue of debentures account should be debited with that respective discount. So these all things need to be done since you have learned the issue of shares in the first unit as well as issue of debentures in the second unit just previous 2 weeks. You must be able to cover these alterations in the journal entries. Just make a note, and when solving the sum, I will explain again in detail. So we have seen 3 different situations, what are the entries to be made in the new set of books of accounts in the acquisition of company. The fourth one is if interest is payable to the vendors due to the delay payment on the purchase consideration, then what should be done? Interest to vendors account debited because interest is payable, it is an expenses for the acquisition company. So that have to be paid since it is an expense, it's a nominal account, all expenses have to be debited. So interest to vendors have to be debited to vendors account. So interest account debited to vendors account with the amount of interest payable. The interest had to be calculated from the date of purchase, from the date of acquisition till the date of final payment. Please make a note. This entry would be made before the payment is made to the vendors, and the amount of interest would be included along with the payment. That time you cannot argue that purchase consideration is less. No, it has to be included along with the payment. The next important note what we need to consider is that the realization expenses is expected to borne. Is that borne by the vendor or is that have to be borne by the company, acquiring company? Now, if the realization expenses of the vendor are borne by the company and the acquisition expenses are incurred by the company, the same has to be treated as capital loss, and the entry for this have to be written as additive, that is goodwill account debited to cash or bank account. with the amount of expenditure. So it could be acquisition expenses, it could be asset realization expenses, etc. etc. Here, the capital loss is treated as goodwill. Why it is called as capital loss? Because these are the expenses incurred while acquiring the company. Because it's not yet started, because the business is going on, we are acquiring it, but we are converting that as a company. So in that, the expenses, whatever we spend, that becomes as a capital loss. So that capital loss has to be treated as goodwill account. Hence, goodwill account debited to cash or bank account. Or we can also say like this: realization expenses account debited, acquisition expenses account debited to bank account, and then those two expenses, the realization account expenses and acquisition expenses account, these two accounts have to be transferred to goodwill account. So then the second entry would be goodwill account debited to realization expenses account to acquisition expenses. So by merging these two journal entries, so I said goodwill account debited to cash and bank account in a simple way. So we may follow either pattern, either making one single entry or making two entries and compounding this. I hope you understand this better. The last one most important thing is that if any item of expenses or losses which can be adjusted against securities premium account under section 78 of the Companies Act 1956, the same should be adjusted to the extent possible, and for this the entry need to be made. That is, the entry is securities premium account debited to preliminary expenses account or to discount on issue of shares account or to discount on issue of debentures account. So why it is so? I will explain that. Securities premium account is an expenses for the acquiring company because you are paying, and it has to be adjusted with the existing assets. Securities premium is a liability that have to be adjusted with the concerned assets. So here concerned assets is either preliminary expenses, it could be, or a discount on issue of shares, it could be, or discount on issue of debentures, it could be. So according to that particular ledger account, this has to be adjusted. So with this, let me summarize the concept whatever we learned through this happy learning method, that is acquisition of company. So first we gone through what is acquisition of company. So what are the ways the acquisition may happen? So it has under preview of amalgamation, absorption and reconstruction of companies also. So here we explain what is acquisition, how the acquisitions can happen, what are the different forms of acquisition. This is what we have seen. Then next, we also dealt with the important points which have to be noted in connection with acquisition of business. So there we came out with 6 important points, namely consideration, mode of payment of the consideration, then interest payable to vendors, realization expenses, and whether to open a new set of books by the company, and the last one, collection of debtors and payment of creditors, and just on behalf of the vendor to do the receivable management. And last but not least, we also discussed the accounting entries in the books of purchasing company on acquisition. So it is applicable only when the acquiring company follows a new set of books. So in this we have gone through under 6 different aspects. One is when the business is acquired, what journal entry to be passed. Second, when the assets and liabilities are taken over by the company, then what are the entries to be entered and how the differences can be treated. If the difference comes on the debit side, which means the credit total is greater than the debit total, then the difference comes on the debit side. The debit amount can be called as goodwill account. If the debit side is total is greater than the credit total, the credit balance, we have to write this as capital reserve. This is what we have seen. This is most important. Even in recap, I am repeating, goodwill or capital reserve should be assigned only as indicated. Right? The third journal entry we have discussed on the payment of to the vendors in different options. And we also discussed what are the different purchase consideration payment to vendors in different options, either by cash or by SAR or by issue of debentures or combination of these. So for this, what would be the journal entry? Then, if at all, if the purchase consideration payment is delayed due to some reason by the acquisition company, by the acquiring company, then the interest has to be paid during the delay period. For that also, we have seen the journal entry. Then, if the realization expenses borne by the vendor or borne by the company, so how the treatment has to be done? So whatever the expenses made, then this has to be treated as capital loss and transferred to goodwill account. Hence, I said I necessitated the importance of goodwill, treating the capital loss as goodwill. Then last, we also learned if any expenses or losses adjusted with the securities premium, how to pass journal entry under section 78 of the Companies Act. That's also we discussed. So these are the entire summary of today's class. So I hope you enjoyed the class and try to recover all your learnings and make an important note of the journal entries. In the upcoming class, we will be solving full-fledged sum in the acquisition of business with all the purchase consideration, with all the other transactions and adjustments, whatever we have seen now. So this lecture will be a prelude for solving any sort of sums, any sort of problems from acquisition of business. Hence, I request you to pay attention and again and again watch this particular lecture to keep on make you to understand and keep on update with the present knowledge whatever you have. So with this, let me introduce yes question which we will be discussing in the next upcoming week video lecture. So there is a company called Woodlands Limited. So that Woodlands Limited is acquiring a business, and the assets and liabilities of the business were provided. And the assets and liabilities revaluation also happened. And the consideration also given. So now, by using that, we are expected to pass the journal entries as well as prepare the balance sheet of Woodlands Limited after the acquisition. So that's what we are going to do in the upcoming class. So I request you to update all the lectures, whatever we have learned, whatever we have delivered till now. It is a mutual learning for both of us. So have a good and wonderful weekend, and I will continue the acquisition of business in the upcoming lecture. Thank you. Happy learning to you all.